Hey everyone, it's Rayce Robinson, your favorite Florida mortgage broker, coming to you with your real estate numbers through the end of August. We're going to call them September numbers, but they cover till the end of August. And I'm really curious to see these numbers. I was curious to see, was inventory going to go up? Is there any type of price depreciation going on, especially with rates going up? And then really, like, what are days, as far as average days on market, all these things that's going to dictate what happens on our market, especially over the next 6 months as the Fed drives rates up. Also, do me a favor, if you like the video, subscribe to my channel. All things real estate, especially here in Central Florida, definitely helps out and helps other people find the video. So anyways, if you look right here, I'm going to jump around a little bit, but inventory currently sitting, this is all homes, including townhomes, condos, and everything, about 6,762. Last year it was 3,600 or so. That's an 85% increase. Obviously, that's a big jump from last year. But currently, from this year, it's only up 3.7%. So from last month. So that's not a big increase. Months of supply, 2 months of supply, which is super low. Again, to have any type of meaningful price depreciation or homes going down in price, you're really going to need 4, 5, 6 months of inventory. And even then, that's what most realtors would say would be a balanced market. So we are far from any type of price action. Remember, every market's different. This is here in Central Florida. But again, here in Central Florida with 2 months of supply, and I don't see that increasing that much. We're going to go over why in a minute. And that's really the star of the show, is the inventory. I look right here, median price is coming down a little bit, minus 1.6%. But again, really no big change. And I'm not expecting any big changes. And again, I'll explain why. So if you look right here, these are the current numbers. So rates, this says 5.29%. Rates are, closer to 6% right now. So we showed there was 6,762 homes on the market. So if you look right here, listings from July to August went down. There were less people that listed their home from July to August. New contracts, about 3,000 new contracts. Closed sales have been running right around 3,300 sales. Average days on the market, 27 days. That's still really fast. And if you look right here, there's 5,304 single-family homes on the market. I also pulled this up, and this is current as of this week. There's really 5,162 homes on the market as of September 17th. I think this is actually through maybe September 11th. But again, if there's 5,162 homes on the market, what does that mean when August was 5,304? Inventory is falling. So what does all this mean? That's really what I like to do, is interpret the data so that I can figure out what is going on in the market, not emotion, not what I want, not what I think, but what's the data say. So with the Fed is making money more expensive and demand is falling, meaning there are less people buying homes right now than there were last year, which makes sense, right? If money is more expensive, less people are qualifying, less people are motivated to buy. At the same time, sellers are also going through what we call supply destruction. And what that means is, if you're a seller right now, you're probably sitting on a lot of equity, you have a really low payment, you probably have a rate somewhere around 3% or so. And if you were to buy a house, you would be doubling your rate. So there's not as much incentive to trade in that equity and go get another home at a higher price and at a higher rate. And so sellers are just deciding to sit it out, which means at the same time, some buyers are sitting it out. Sellers are also saying, well, maybe we'll wait. You get this weird thing going on where demand is falling, but at the same time, inventory is falling. So if you're a homeowner, the good news of that is with 2 months of inventory, there's really just no way for prices to fall, at least not meaningfully. And at the same time, if you're a home buyer, it does kind of stink because prices are getting, really not coming down, but the cost of that money is going up, making it harder to buy. Now again, all markets are different. That's here in Central Florida. Every local market will have a different reaction to these rates. All of Florida really continuing to be a hot market. So one of the things here that's interesting though, if you look here at the yield curves, if you look at the shorter term, everyone predicting higher rates, but as you get further down the yield curve, like a 30-year, predicting lower rates sometime next year. And that's really what the market's waiting for, is the Fed to pivot, start lowering the Fed funds rate, and maybe unfortunately employment may be going up. At the same time, inflation, maybe gets more in check, which that's when the Fed will tend to pivot. At the same time, money could get a little cheaper. But imagine if rates were to go down right now, everybody would jump back in the market, and we only have 2 months of inventory. which really not be a great thing. We really need more inventory in most markets across Florida, and builders are actually starting to slow down as well, where they're building less homes, kind of leaning into the fact that rates are going to be more expensive, which isn't going to help either. So in the short term, I expect money to get more expensive. Next year, rates to be lower. How much lower remains to be seen. Now, if you're a home buyer, the opportunity is to, if you can, find a house that fits your criteria, potentially buy now while there is less competition. A lot of people still buying, and potentially refinance next year to a lower payment, because again, when rates fall, a lot more people are going to jump in the market and buy a home. So that's what the data says now. Demand falling some, inventory falling a little bit, prices stabilizing, and at this point, no real price depreciation. No one predicting any major price depreciation for the most part. Fannie, Freddie, Zillow, Redfin, whoever, you name it, really predicting a really flat market and prices stabilizing throughout. Let's call it flat this year to next year. Really no major appreciation and no big depreciation, at least in most markets. All right, so that's what the data says. If you have any questions on this or anything else, reach out to me. I'd love to help. Still lots of ways to get that payment down using adjustable rates and then having a refi strategy into next year. That make it a great day. Again, let me know what I can do to help. I'll talk to you soon. Bye-bye.